know, equities in North America have been trading around all-time highs. Where will the momentum take us next? Let's get some perspective from Clark Geranen, Chief Market Strategist at Cowbay Investments. Great to have you with us. I was looking at some fund manager data from Bank of America this week that indicated that there's a pretty bullish tone out there, kind of feeding into the idea of don't fight the tape. What's been your general takeaway, Clark, on where this market is and where it could be going?
Well, as we've been reaching these all-time highs and pushing them week after week, we really tend to think that the market reaction back in April was more emotional and not based on fundamentals. So although it does feel like there's some deja vu coming up with the pending tariff dates, we are really constructive on the future and really are looking to some of the fundamentals and earnings numbers that are going to come in to help support that.
Yeah, what specifically would be your litmus test with earnings? Like, what are you looking for? Is it just the straight up numbers? Is it the messaging for, the coming quarters, just given some of the uncertainties? What's helpful to you as an investor?
So it's a combination of not only the earnings, like we've seen some of the bank earnings come out, and while they haven't necessarily beat expectations, they've still been decent. And so we are happy about that. The other part is just the narrative and the outlook. So we've seen a lot of economists come out and now they've revised some of their 2025 and 2026 year-end targets, which 4 months ago, those were cut in half. So to see those move up and to see just some of the narrative from companies and investors both have been positive for us.
The poor strategists, it's like they're chasing the bus all the time, but it's a hard job, but they get paid well. Anyway, when I look at the markets, to your point, since April, the S&P 500, since the lows, the post-Liberation Day lows, I think we're up like 25%. And just about every subgroup in the S&P has seen a meaningful advance. Financials that are getting a lot of attention this week are trailing the overall S&P to a certain degree, and that is in part because tech has had such a rip-roaring rally. I believe the S&P Infotech group is up about 45% since the April lows. So when you think about where you're invested, sectors that you're invested in, Clark, right now, what's been your message to clients?
So both financials and tech have been one of our strongest assets. And we really did look at the April and May lows as a great entry point. We saw valuations get compressed. And so some of these companies were the cheapest that they've been in years. And so that was a great opportunity for some of the cash that we had on the sidelines. And it's funny seeing the investor sentiment really moving from fear more towards greed. And so you're just seeing more of an appetite for risk-based assets, knowing that the risk-free rate is going to be coming down over the next year or so, especially with the new Fed chair coming in. And so we've really been seeing more of an appetite for that. I just had a client come in last week with $400,000 in cash, and he was saying the CD rates just aren't cutting it for him. If you had told me that 4 months ago, you would have thought I was crazy. So it's really interesting seeing this shift from risk-free assets moving more into equities.
And I guess before I let you go, just kind of to put a bow on everything you've been talking about, since we are in earnings season and we haven't really heard from technology companies, I think Netflix set to report, but more so the companies that are doing a lot of the big spending on AI, it feels like they would be a good group to listen to in terms of what they're doing, what their expectations are. And I say that as well because so many of those stocks have had a nice move. So since you've been optimistic about tech, what are you going to be listening to from those big tech companies on that subject of AI?
We're really going to be listening to some of their capital expenditure numbers, seeing those and seeing what their general outlook is. Because like we saw, people were coming out with multiple scenarios as to how the tariffs were implemented, when they were implemented, and what that final number was going to be. And so being able to see now more clear direction from some of these companies is going to be really assuring for not only us, but I think companies in general. It's just going to have a compounding effect.